students, welcome to Sunita Academy channel. In the previous session, we have learned about the lessons that we are going to study in this year in PUC Accountancy. Today, I am taking up the chapter 1, Accounting for Partnership, Basic Concepts. Firstly, let us know about the definition of partnership. This will come for 2 marks in the examination. According to Section 4 of Indian Partnership Act 1932, this act defines the partnership as the relationship between two or more persons who have agreed to share the profits of the business carried on by all or any one of them acting for all. That means in a partnership business, there will be minimum two persons, two or more persons to start a business and who have agreed to share the profits of the business. There will be agreement between the partners and what they agree is they share the profits of the business carried on by all. That means all of them can participate in the business or any one of them acting for all. That means any one partner can represent others. With this definition, we can list out the features of the partnership business. So, as per this definition, in this definition only, we can make out the list of features. First one, to start a partnership business, how many are required? Two or more persons, first thing. And second one, there should be agreement that can be oral or written agreement, that is second feature. And there will be sharing of profits between the partners. Whatever the profits they gain, that will be shared among the partners. And the business carried on by all. That means all the partners can actively participate in the business or any one of them acting for all here. Any one or two persons can represent other partners of the business. This is called as mutual agency. So this is the definition of the business according to Indian Partnership Act 1932. So next concept is features of partnership business. First one, two or more persons. As per the definition that we have learned, there should be two or more persons. To start partnership business, how many are required? Two or more persons in the business. And there will be agreement. That means that can be oral or written agreement. Usually to avoid the conflicts among the partners, there will be usually partners make written agreement. The next one is sharing of profits. Definitely whatever the profit they earn in the business, that will be shared among the partners. And mutual agency here, it means, as I said, all the partners can actively participate in the business or any one of them, one or more of them acting for all. That means any one partner can represent other partners in the business. And lastly, the liability of the business. Usually, liability of the partners. Usually, liability of the partners will be unlimited. In the previous year, we have learned that unlimited liability means if business assets are not suffice, if business assets are not enough to clear the debts of the business, usually the personal assets of the partners will be taken into consideration to clear the debts of the business. ಸಾಲ ಏನಾದರೂ ಇತ್ತು ಅಂತ ಅಂದರೆ ಬಿಸ್ನೆಸ್ ಅಸೆಟ್ಸ್ ಸಾಕಾಗಲಿಲ್ಲ, ಅದನ್ನು ಮಾರಿದಾಗ ನಮಗೆ ದುಡ್ಡು ಸಾಕಾಗಲಿಲ್ಲ ಅಂತಂದರೆ ಪರ್ಸನಲ್ ಅಸೆಟ್ಸ್ ಆಫ್ ದ ಪಾರ್ಟ್ನರ್ಸ್ ವಿಲ್ ಬಿ ಕನ್ಸಿಡರ್ಡ್ ಟು ಕ್ಲಿಯರ್ ದ debts of the business. The next concept is about the partnership deed. What is the meaning of deed? Deed means written agreement or document. Deed means written document or the agreement. Now the partnership deed here, written agreement or document that is made by the partners. What it contains? It contains terms of agreement that governs the partnership business. It is a written agreement or the document made by all the partners which contains what terms and conditions of the partnership business. Okay. The next concept is contents of partnership deed. So what are the terms and conditions that will be there in partnership deed? So first one, name of the firm. That means firm again that will be there, and address of the firm, where it is actually located, and names and addresses of all the partners, and capital investment made by each partner in the business, and profit and loss sharing ratio, whatever the profit they earn in the business, how the profits of the business will be shared, in which ratio the profits of the business will be shared among the partners, and rate of interest that will be given on capital investment made by the partners, and drawings. That means for their personal use, they usually withdraw money from the business. Usually business charges interest on such drawings. What are the rate of interest that will be charged on drawings of the partners, and how much is the rate of interest that will be charged on the loans and advances taken by the partners of the business. And next term is rules to be followed in the case of admission of the business. That means if there are three partners, if any one more person is admitted into the business, what are the rules to be followed? And in case of what are the rules to be followed in the case of retirement of the retirement of any partner? What are the rules to be followed in case of death of any partner of the business, and how the business, what are the rules to be followed in the case of dissolution of the business? If business is going to dissolve or it is going to close, then what are the rules to be followed in such case? So these are all the contents of the partnership deed. The next concept is provision under Indian Partnership Act 1932 in absence of partnership deed. We have seen that in the last concept, the partnership, about the partnership deed. What is the meaning of partnership deed? Partnership deed means it is a written agreement or document which contains the terms and conditions of partnership business. In case of partnership deed ಇಲ್ಲ ಅಂತಂದ್ರೆ ಯಾವ ತರ ನಾವು ಫಾಲೋ ಮಾಡಬೇಕು? What are the provisions that are there under Indian Partnership Act 1932 in the absence of partnership deed? Partners of the business ಅವರು ಏನಾದರೂ ಅಗ್ರಿಮೆಂಟ್ ಮಾಡ್ಕೊಂಡಿಲ್ಲ, ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಡೀಡ್ ತರ ಅಗ್ರಿಮೆಂಟ್ ಡಾಕ್ಯುಮೆಂಟ್ ಏನು ಮಾಡ್ಕೊಂಡಿಲ್ಲ ಅಂತಂದ್ರೆ ಇನ್ ಸಚ್ ಕೇಸಸ್ ನಾವು ಯಾವ ತರ ಫಾಲೋ ಮಾಡಬೇಕು ಅಂತ ಹೇಳಿ ಒಂದು ಪ್ರಾವಿಷನ್ ನ ಪ್ರೊವೈಡ್ ಮಾಡ್ತಾನೆ ಇಂಡಿಯನ್ ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಆಕ್ಟ್ 1932 ಅಂಡರ್ ಅಲ್ಲಿ. ಸೊ ಏನದು? ಫಸ್ಟ್ ಒನ್ ಪ್ರಾಫಿಟ್ ಶೇರಿಂಗ್ ರೇಷಿಯೋ. ನಮ್ಮ ಹತ್ರ ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಡೀಡ್ ಇಲ್ಲ ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಬಿಸ್ನೆಸ್ ಅಲ್ಲಿ, ಇನ್ ಸಚ್ ಕೇಸ್ ಯಾವ ತರ ಪ್ರಾಫಿಟ್ ನ ಶೇರ್ ಮಾಡ್ಕೋಬೇಕು? ಹೌ ದ ಪ್ರಾಫಿಟ್ ಆಫ್ ದ ಬಿಸ್ನೆಸ್ ವಿಲ್ ಬಿ ಶೇರ್ಡ್ ಅಮಾಂಗ್ ದ partners. That will be equal share. In case of A, B, C are the partners. If they are earning 75,000 rupees of profit, and that will be shared among all the partners equally. 25,000 A, 25,000 B, 25,000 to C. So like this, that will be shared equally, shared among all the partners. That is first one, first provision under Indian Partnership Act 1932 in the absence of partnership deed. The next one, interest on capital. Interest on capital here, no interest, no partner is entitled to get any kind of interest on their capital contribution. ಯಾವುದೇ ರೀತಿ interest on capital that will not be given to any of the partners in the absence of partnership deed. Next thing is interest on drawings. So as I said, drawings ಅಂತಂದ್ರೆ for their personal use ಏನು ಮಾಡ್ತಾರೆ, usually partners they withdraw money from the business. In such cases, partnership business they charge interest on such drawings. In the absence of partnership deed, agreement and document illa antandre, in such cases no interest is charged on drawings made by the partners. Next thing is interest on loans and advances that is taken by the partners. In the absence of partnership deed agreement illa anta case alli yavadru partner loans and advances business inda tagondidre they will be charged 6% per annum on the loans and advances. Next, salary or commission to the partners. That means no remuneration, no salary or no commission to the partners. No partner is entitled to get any kind of salary or remuneration or commission to any of the partners in the business. The next concept is maintenance of partners' capital accounts. Usually, all the transactions relating to partners of the firm are recorded in the books of the firm through the individual capital accounts like capital investment made by the partners, then interest on capital, interest on drawings, salary given to the partners, commission payable to the partners, then additional capital invested by the partners. So these are all certain transactions that will be recorded in their individual capital accounts, for which we have two methods. First one, fixed capital method. Second one is fluctuating capital method. So let us know the difference between, let us know the meaning and difference between these two methods. So let's take a first one, fixed capital method. Fixed capital method, here it means capital, as the name itself is saying, capital of the partners shall remain constant, that will remain unchanged. Because here in the fixed capital method we maintain two accounts. First one is partners capital account, second one is partners current account. In partners capital account we maintain the original capital. We maintain what? Original capital invested by the partner. In partners current account we record interest on capital, interest on drawings and salary payable to any of the partners, commission payable to any partner. These are recorded in partners current account. In partners capital account we record only original capital invested by the partner. So, the capital of the partners shall remain constant until and unless they invest additional capital into the business or any withdrawal made by any of the partners, until and unless the capital of the partners shall remain constant or unchanged. Because all other items or transactions are recorded in partners current account. So it is called as fixed capital method. This will come for 2 marks. Then the second method is fluctuating capital method. So what is the meaning of fluctuating capital method? Fluctuating capital method is, as the name itself is saying, capital of the partners will be varied. Capital of the partners that varies or differs from year to year, because in this fluctuating capital method we maintain only partners capital account, in which we record capital investment made by each partner, capital made by the partner, and second one, interest on capital, interest on drawings, salary, commission, everything we record in this fluctuating capital method. In only one account we record all these things. That is why the capital of the partners varies from year to year. Fluctuating and then fluctuate and the variable. In fixed capital method, their capital shall remain unchanged. Yakandre a capital account separate, current account separate. Capital account ಏನು ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀವಿ ನಾವು only original investment made by the partner. So current account ಅಲ್ಲಿ ಇದೆಲ್ಲ separate ಆಗಿ ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀವಿ. But in this fluctuating capital method, what we are doing is capital made by the partner and interest on capital, interest on drawings, salary payable to the partner, commission payable to the partner, everything we record it in only one account, that is partners capital account. That is why capital of the partners varies from year to year or differs from year to year.